So here we have type 5 area of liquidity, the authenticated one. So we are talking only for the authenticated areas of liquidity. And for this area of liquidity, it's just similar with type 6 because they all talk about what we call the weak overlap. But for the type 5, it has different scenario to consider. So the first scenario, the price must be at the free fall or rise. Price must be also the second scenario. Price must be, we must start on daily time frame. The third one must be current price. So which means once a certain weak overlap has been formed, we don't want to see any other weak overlap has been formed this way. So which means at this point, if this one wasn't consumed and the other one was formed, then this one has no longer having power for us to be taken into consideration, which means now this will be the current one to be considered. So we need to see price consuming this area of liquidity here above. If it won't as well, then we won't consider it. And it needs to be at the free fall or rise, which means whenever we talked about the areas of liquidity, we saw that we have what we call the extremes, the lows or the highs. So we don't want to see these, the weak overlap has been formed here at the extremes. If it has been formed at the extremes, then this is not be considered as our type 5 area of liquidity because we can consider any other kind of structure, but not the type 5 area of liquidity. We can consider any kind of area of liquidity. Maybe if we could have multiple touches, then you can consider this as the type 2 area of liquidity since we can, this one looks like a camouflage. So everything must be at the free fall or free rise, which means now if we have the area of liquidity, we need these structures to be formed somewhere here. And if price managed to break, which means now we need these structures to be formed somewhere here for us to be taken into consideration. Those weak overlap. So that's it. Let's see some examples from the chart for some good. So it needs to start from daily to weekly. I mean to monthly. So it can either be daily, weekly, or monthly. But for the type 6, we'll see that it's only weekly and monthly. So for instance, and for best example, we'll see it's this one. This one is also the type 6, also the type 5. This one you can clearly see. This is at the free fall or free rise because we don't have any extremes, which means now price hasn't tapped here. Of course, this hasn't been created at the extremes, which means now it has just been created. You see, price hasn't tapped this area, these extremes, and now we consider it as just at the free level. So, which means now if the price is at the free level, we can easily consider taking the trade. And also, we see we didn't have any weak overlap has been created here after the first one to be created, this one. You see, we were supposed to see another weak overlap to be created after this one, but price didn't, which means this one is eligible for us to be taking the trade. And we need to confirm it on our daily time frame. Is there an area of liquidity? And surely there's an area of liquidity around that area, and that's why we call it the we call it the type 5 area of liquidity. Another example maybe we can see here in a clear way is this one. This one here. Let me just cut it to show you clear in a clear way. This one here. So this hasn't been created at the extremes. It can either be from your daily time frame or so you can clearly see. After price created this weak overlap, also this one is okay. So this is, you can clearly see price hasn't created it at the extremes. So which means we need to go on daily to confirm. So we see on daily we have the area of liquidity. Now we can consider this area of liquidity for us to take the trade as the liquidity consumption later on as the price drops to the downside. Let us see from few more examples. For instance, now let me give you an example. For instance, if you consider this one, this won't be the week. It won't be the type 5 because it's already at the extremes and it has given us the type 2 area of liquidity. It's already at the extremes. So we want the one is just trending without any obstacles. For instance, here we see price giving us the series of candles. Now this one was the best. This one was the best, as you can clearly see. This was the best because price hasn't offered us another. So what we need is to go for hour now to confirm if there's an area of liquidity. So we see there's an area of liquidity, and that's why price came here to grab the liquidity, then drop to the downside. So some areas of liquidity can be considered on such a way. Let me show you one more example from this daily time frame. This one is at the extremes, now can be considered as the type 2. It's already at the extremes. We want the one that is not at the extreme at all for us to be considered as just a normal type 5 area of liquidity. This also is at the extremes, considered it as a type 2. This was not at the extremes. Or this was at the extremes because we see it touched this lowest point of the price. Oh, this one was not at the extremes. This here. It was just in between. Okay, clear seat came here to grab the liquidity, then pumps to the upside direction. That's how you can be trading such kind of areas of liquidity in just very easy way. That's how you can be trading such kind of area of liquidity. Of course, you don't have to trade any kind of, all kinds of area of liquidities. Doesn't, so for instance, another one, this one, this was just not at the extremes. So what you need to be done after you've found your area of liquidity, then go to 4 hours, watch if there's any area of liquidity here. Then you see price came here, tapped, took the liquidity, then pumps to the upside direction. That's how you could be considering taking your trades based on type 5 area of liquidity. Same applies to type 6, but the type 6 must be entered with confirmation. And that's it. And normally for this type 5 area of liquidity, price will eventually just go to grab the liquidity from the downside. Same as what we call the type 4. But for the type 5, it has its scenario, and type 4 also it has its scenario to be considered. So make sure you take your time back testing the markets. Thank you and enjoy the videos.